in 2025. So what is it that stands out to you in terms of these numbers?
Well, what really stands out to me is, first of all, they have a lot of capital right now. They have $10 billion between what they've gotten from the government and what they've gotten from the VW Corporation. So they have cash, which is a great thing. That's number one. That's been the backdrop. Number two is they're making a lot of changes. Their commercial vans, for example, where they had a deal with Amazon, is now being offered to all who need kind of electric vans for moving. Their price range is somewhat between $75,000 and $85,000 for those things. And that deal initially announced with Amazon was a positive. They're coming out with a California Dune version for off-roading. They're making cheaper models, offering around $45,000 in their R2 model that's coming out. So they're very, very active in terms of keeping up with the market. That's from the actual statistics side. In terms of their earnings, I mean, it was good that they had a gross margin positive. Obviously, they still need to be making a operating margin positive. That hasn't happened yet. But I think this is a company that has a lot of future, and right now it's kind of number two in terms of EV sales in the country, and it is made in the country, another plus.
Okay, so Carl, when you take a look at the earnings and you see the stock reaction today down about 3.5% following this news, what is it that you think is weighing on shares? What are investors most unhappy about?
Well, I think the Q4 numbers for all the electric vehicle companies really need to be carefully considered, because there's this looming likelihood that we're going to see the $7,500 federal incentive go away. And I think there's an awareness of that within the electric car buying community. And I think there's some sales that were pulled forward from that plan. And I've seen this industry long enough to know that when you take away that $7,500 incentive, it's happened in the past for various automakers, it did have a negative impact. And I think no one's kind of really discussing that. There's discussion of that being a possibility. But when you look at, for instance, the planned numbers for Rivian in 25, I think they're taking that into account, that they could lose that incentive, and that's going to impact the entire EV industry, including Rivian.
Yes, Mish, it's not just the incentives that could be rolled back. It's also the potential for tariffs as well. So did Rivian address that? How big of a headwind for the company are both of those things?
Well, just to comment on the incentives, it's actually very confusing, because on one level, yeah, they're talking about taking away the incentives for buying EVs, but on the other, there's talk about giving incentives to companies that are actually manufacturing in the U.S. So we don't really know which way that's going to go. But in terms of the tariffs, well, if they do, considering the car is made of steel and aluminum, two tariffs on the table, if they go through, it's the cost of 25% more on the cost of steel and the cost of aluminum. So the question is, where's the pricing power? Can they actually withstand that cost without passing it on to the consumer? These are all really unknowns. But what other interesting thing outside of the realm of the facts and the earnings is that there is somewhat of a sentiment away from Musk and Tesla going on in the country and heading more into Rivian. And this is kind of what happened with Tesla years ago, is that all their numbers were terrible, but there was such pro-Musk feelings at that time, the stock went up anyway. So there's variables there, and we can talk about the charts too, if you'd like.
Well, Carl, how much of a run for its money is Rivian giving Tesla right now, especially seeing as that lower cost R2 isn't coming until 2026? So it's soon, but not anytime that soon.
Exactly. And I think if you wanted to claim that Rivian is in a building of momentum stage right now for the company, I think that's an accurate assessment. I think it's continuing to expand awareness and build a fan base. And certainly the R2 is going to be very helpful for its long-term outlook. And even more encouraging is this ability to streamline and cut costs that we've seen. So those are all positives. I still feel like the electric vehicle question is still as bigger than it's ever been long-term. Those incentives might drift away, as we've talked about. So if you were asking me, is there reason to believe there's going to be more or less EV sales in 2025 than 2024? I still think the overall forces at play would suggest potentially likely less overall EV sales, including for Rivian, which they've taken into account.
EV sales seem to matter more for Rivian than they do for Tesla. Mish, give you final thoughts. We only have about 30 seconds left, and I'm just curious, would you buy the dip that we're seeing today on Rivian? Because you seem pretty upbeat on it.
I am, and I think you have to look at this longer term. And of course, there's going to be questions about EV futures, but I actually think the future of EV is solid. I don't really necessarily believe that we're going back to gas guzzlers as the primary seller. Hybrids maybe for now. But anyway, looking at the charts, there's a lot of support going down. This stock has been basing out. Right now, it's holding a very key moving average. And if you want to be a dip buyer, I think you're probably safe. I don't think this stock is going to go below 11. Over 1450, this stock starts to look really interesting with a potential to maybe $20 to $25, depending on market conditions.
All right. Well, we appreciate those levels and your thoughts. Mish Schneider, Carl Brauer, thank you so much.